Low Warriors. Hi, Ingmar, Glenn, James, Mike, Gran, AJ, how are you?
Whoops. Good morning,
Same,
Dale. Meant to say
same
good
to
morning.
you.
Good morning,
Same to
everybody.
you, Blake, Ryan, Patrick, everybody. So I thought I'd talk a little bit here about risk and keeping an open mind. I know that good traders always consider both cases, no matter what, when they're in a trade or before they take a trade. So, the bull case, the bear case, and the Dow really fits the bear case. Ellioticians would have called this an ending diagonal, even though that we had a throwover that was negated. And then this week we broke the wedge. So it's kind of bearish. But then I look at S&Ps and this is what bothers me on the bear case on the S&Ps. And it's something that I think you guys are going to know when I show you the chart right away. Here we go, the weekly. What's missing for the bear case here? Archibald, nice to meet you. Coming over here from the trade-off that Blake's in. So anyone know what a third drive? And you know what? I didn't catch this myself. It was someone else who used to be in our communities who, when I was talking about this top up here, said, well, Dale, looks like you have your two drives. Oh, short term, yeah. Brand, we could still, you know, take out this low. Maybe we're going to do ABC first. And we don't have to, but that was confirmed. Anyway, so I'm keeping an open mind that maybe they could find a way to generate a rally to new highs. And you'll have a lot of tells that'll tell you there's something wrong with the rally. You won't get a new high in semiconductors. Certain Mag 7 stocks may not make new highs. I mean, I look at the semis and they're pretty broken. They led the advance, they led the decline. Um, so that's kind of what I'm looking at right now as far as risk is concerned. So you know, this is not anything we get here, and maybe it'll be a great bear market rally back to here if the S&Ps can put it together. But I don't think we'll make a new high. These will be the shorts. Um, anyway, so let's get back to currencies, and I'll bring Ryan in because I have something to ask. You guys are currency experts. Um, Aussie having a decent day. CAD really, another thing threatening a false breakout. I think you have to sell rips here, any rip towards 38 and a half. They cleaned out all the bulls. It's the commercials, I believe, with the record shorts and the large specs with the record longs. So they were right for a while, right? And now they're not. So between the Aussie and Canada, the COT setup is more compelling in Canada. But I want to ask Blake and Ryan this. So I was talking to Julian Brigden about currencies, and he brought up the point that if we're going to enter a bear market in equities, that which countries have invested the most in U.S. equities, and I guessed Norway, and he says it's Sweden. So here you go. We've come off pretty good. Looks, you know, uh, like we're on the verge of a breakdown. I could sell a rip here with a dollar bounce. But the big picture to me looks like this could be a good short. Um, what do you think of that thesis, Ryan, about a lot of sovereign funds over there like Norway and I guess Sweden? Um, has poured a lot of money into U.S. assets, and that we could have a repatriation move back towards the SEC.
Morning, mate. It's
Hey, buddy.
possible. I don't know the numbers myself. I haven't heard such. You'd expect, like you say, Norway to be heavy into it, but everyone's into everything. How much of the how much does it weigh up to the Japanese
Right.
getting into US stocks and others, even non-Japanese, using yen to get into US stocks? So, yeah, I don't have the numbers to make any sort of informed judgment about that.
It kind of looks like Canada, doesn't it? I mean, a lot of distribution, sideways action for a long time,
Yeah, one of those that's not doing an awful lot while everyone else is going potty, sort of thing.
And I looked at Canada the other way, how it is in futures. Yeah, it's my favorite trade again. And the most conviction I have is that the dollar has spoken last week. Okay, and I think you have to sell rips. They're trying to reverse it on the week, but I think the action, this is negative. When you think about it, the market's recovered with the dollar recovering. Isn't that something? Huh?
All those patterns look the same. I did a side by side, the Nikkei and the dollar yen, and you do a side by side with that and yields, and it's what I call the Newton's cradle effect. We've had that big swing down, and then we're having another swing up, and then it runs out of steam, and then we come back again. It probably won't go back as far as the low, and then we'll swing up again. So we're probably heading, summer days as well. We're probably heading for a bit of consolidation. We've made the markers 142, 148. That's your markers. If you want to mess around in between that, well, you should get enough volatility to do that. And then probably the next thoughts are going to start switching to Jackson's Hole and what's the Fed going to say next. So until then, probably I can see a bit of consolidation, but in this pair, you can still get 200, 300 pip moves as we saw the other day with Uchida.
When is Jackson Hole, bro?
22nd, 24th, I think.
Okay.
If I'm not mistaken, it's usually around the 20th sometime.
Metalheads, silver, diverged, retested. Depends how you draw your line.
26, 26, 10.
Breakout. Yeah. Almost got to the breakout. So physical looks okay. The shares don't look great unless they really could turn it around. And gold just would not give up the ghost. So still acting okay. Where you have to get out or get short. I've been waiting for this for a while now. I don't know. Maybe we're just going to blow silver at an important point. So, if you're bearish the dollar, and you're a silver bull, you have to think that, we're getting close to a pretty good sale. And, if you're a believer in a precious metal bull market, then you should be looking for shorts and gold silver ratio. And I'm not going to get in front of this. So, Wait, you know what? It looks a lot like the Canadian. Everything looks like the Canadian to me today, guys. What's going on?
We're all Canadian today.
They just changing the titles on the chart when I switch.
Yeah, get the beaver hats out.
Yeah. So what are you doing in this environment, buddy?
Struggling. No,
okay.
There's some things that don't make sense. We've been talking about in the chat room, like the pound. Why is the pound, suddenly looking a bit weaker when it was, the shining star of the last few weeks? You could chuck a few reasons at it. Might be fiscal stuff coming, might be, the protests and stuff going on. But, it makes it difficult because if you think that a currency isn't following the fundamentals, you've got two choices. You either stick directly to trading the techs or you sit on your hands. I was saying this morning, not long before we started the show here, cable looked like it was going to bust 126.70, you know,
Yeah.
the 50 fib, and it went to 65, and here we are now tickling the big figure again. Same with euro sterling. You know, we had a look up to that 86.20s. We got up to 86.25, call it,
Yeah.
and now we're back down again. So it's
Yeah,
not,
this
the
looks.
pound isn't
I wanted to
bouncing.
ask you about this. This looks like
Yeah.
you know, a failed breakdown under 85, and then once it got back above 85, why can't we have something like this happen from here, which is a higher low, and really have a a nice ride in euro pound intermediate term? And wouldn't it be more of a bearish sign for the dollar that the euro would outperform cable? Wouldn't a bull market, a bear market in the dollar, bull market in euro have EG heading higher?
Yeah, it's a difficult one because I say, you know, why would euro go high except for dollar weakness, and why would the pound weaken if the dollar's weakening? You know, so if you had to put them side by side, the UK is doing much better, albeit smalls, by in the economy than the euro is doing, and the eurozone countries are doing. So it still favours, the landscape still favours the pound to outperform the euro. So if it's not going that way, I don't know. There's something else happening that investors are worried about. But yeah,
investors.
You know what this one's like, Blake, Dale. It can suck you in for days and trade within 20 pips before it makes a move.
Yeah.
You know that you say it looks a fake out through 85, but it spent the best part of 2 months under there, and you could make good money trading between 84 and 85.
Yeah, that is a weekly. You had time. You had some trades. You had rally to the breakdown failure, but I don't know. I think this took the bear case away for a while.
Yeah.
Okay. So Gara's saying map of Norges Bank. Okay, there you go. So that if you want to check out Julian's narrative, there you go. So if you think there's going to be a bear market in equities, these would be the currencies that probably have the biggest repatriation.
And
Thank you, Gare.
And Gear is actually in our chat room too, and lives in Norway. So it's he keeps a real good pulse on the U.S. dollar, Norwegian krona, and what's happening with the Norges central bank.
Yeah, it's nice to see new names in here. Archibald, do you know him, Blake?
No, new.
Okay.
Probably just apparently just watching the trade off, which we just did last night.
Oh, that's right.
And I tell you what,
you're like the Pied Piper; they follow you.
No, but I'll tell you what. When we were filming, if you listen really closely, you can hear trades going off in my microphone. I have a really good microphone that suppresses most sounds around me, and you could hear just because it's so loud. There's like ping. I had like 2 trades going off, like triggering orders as I was filming yesterday, and it's funny because I watched the replay and I could hear them going off, and then I could see my eyes bolting around looking at my trade stations, trying to keep a straight face and doing a show. Has that happened to you, Ryan, when you're filming the UK trade off?
Yeah, I've always got half an eye on the screen. You always see me flicking left and right, seeing what's going on.
I've wanted to cut off a few interviews once in a while.
Yeah,
that I start right after a major number and everything's happening, and
it's hard.
I can't do anything about it.
And last night, I mean, we had there was like you took the yen pairs. I actually was selling into the strength in the Aussie yen overnight. And we had 120 pip move, like literally as soon as Asia opened, and well, maybe not as soon as, like, maybe they were open for a couple hours. But then, yeah, my orders are getting triggered. Anyway, it was a very fun night, and I was surprised to wake up this morning and have such a calm market. But Dale, if you want, I can take over from here. I want to point out though, when I say this, I think the market is well needed as far as having some consolidation goes. And I think that believe it or not, this data that we're going to get, the weekly unemployment claims here in just 15 minutes, it could be a market mover, especially if we breach that 250,000 level mark. What do you think about that, Ryan? I mean, it's getting a little, it's getting a little nerve wracking. If you're an economist and you're, a recession watcher, if you will, the numbers getting up in this area are a little nerve wracking. What do you think?
I'm going to take the other side as usual. We got continued claims, 1.8 million, hasn't really moved. We've waffled around this 200k mark. Yes, it is creeping up. I don't know if you can get the chart up there of the jobless numbers.
I don't know what
because it's shrunken. Yeah, so
yeah, it's I've got to pull it up this way. I think I can pull it up this way.
Just tick the yearly box on the chart time frame.
Yeah, let me just let's do it like this. Whoops. I'm just trying to scroll this back.
To the top of the box, you'll see 1 year, 5 year, like a time frame. Scroll up a little bit. Yeah. There we go. Bingo. Yeah. There we go. So you can see this year it's ticking up, but we're talking 5, 10k here or there. Until we get above 300, 350, heading to the fours, and until we get above 2 million, 2.2 million in the continued claims, it's not a big deal. Yeah, the market could make a big deal of it, particularly in the environment we're in after the NFP. So yeah, today's numbers could be frothy if we get a 250 and a 1.9. Expect some moves, but this is still in soft landing. None of this has flagged. Well, maybe it has started to flag what we saw in the NFP. Just these numbers ticking up a bit.
Yeah. Well, maybe, and I think
in Japan, kind of a Mother Nature's way of reverberating what happened to the carry trade. What do you think? Inappropriate?
Might be it. Maybe that's it. And
we had a financial earthquake and then a for real one.
Well, we can joke about this and everything, but I live in Phoenix, Arizona, and there was tornado warnings for our area. Oh, yeah. We don't get those here. I was telling my wife, I'm like, that's a bunch of crap. That never even happens. Like what?
But you weren't out storm chasing?
Yeah, no, not in this. Not when I lived in Texas, yes, but not here. Anyway, but what I do want to talk a little bit about is this calm that we're seeing right now. It is really quiet, but I want to say this. I feel the market is very vulnerable right now. If you look at, and I'm going to take a look at a bunch of different markets real quick. You look at the S&P. We rejected the 38% retracement. This is and this is one thing that I talked about the trade-off last night. I had to delete this drawing because when I do analysis on ForexAnalytix and I do the daily charts at the end of the day, if I have all these intraday lines drawn, it really starts to look kind of messy as far as the chart goes. But if you look at the S&P, we have a bear flag pattern. We've broken down. Now we're just consolidating this breakdown. But you look at like the NASDAQ 100, similar, right? The Dow is approaching pretty key support here. You can see it's like this is I would think pretty critical support somewhere down in these levels, somewhere around here. But bear flags. You look at the Russell, the Russell's had very limited bounces. These are very shallow bounces in US equities. And that to me is very, very concerning. And then you take a look at all of these yen pairs, and I'm going to just go through them really fast. The euro yen can't even reach a 38% retracement. Sterling yen is having a hard time getting above the 24% retracement. Again, Ryan, you were just referencing how weak sterling is, and you and James P in the chat room before I woke up, you guys were having a conversation about weak sterling. Yeah, you can see it right here. I mean, it's ugly. Aussie yen Can't make it past the 38% retracement Kiwi yen. Can't even make it past the 38% retracement Canadian yen. Can't even make it past the 38% retracement sitting on a long-term multi-year trend line. Even the peso yen, very, very shallow, 24% retracement. Can't get back above like this even resistance zone. When you see situations like this, and and one last thing I want to bring up, we just had Mexican CPI came out just as F.A.C.E started. But what we're doing with the dollar Mexican peso, and I want to show you longer term, we have actually hit the 38% retracement, but we're above 19, which is this is a bullish wedge, and we broke out and we're holding above 19. And we have Banxico later today. Banxico is supposed to keep their rates unchanged, and that comes in at they make their decision at 2 p.m. Eastern. So just FYI, if you have some peso exposure. But I use the Mexican peso as the volatility, like the VIX of the FX market. And the one thing that we have to be looking at with the dollar MEX is if we scale 20 again, we're not looking back. So what I mean by that is we probed 20 one time, and that's again, 38% retracement. Let me delete that. 38% retracement of the entire move down. And we get back above that. And I don't think we're gonna that would be the FX illustration of a resurgence in volatility. So we've seen this VIX tick up, right? But now the VIX is consolidating, and let me grab this green line here, and let me put it right there. You can see VIX is consolidating at a higher level. So what this all tells us is this market is sitting on pins and needles, and we are very much on the verge of something tipping us over. And this is a conversation, again, if you're in the FX or the ForexAnalytix chat room, in our general chat room, I wrote it all out right here this morning. But these are the conversations that we have in here. You can see all different traders talking about different asset classes. And this is just from this morning when nothing's happening. You can see all these conversations that are going on. You guys should be in there because this is a great place to be talking markets with people all the time. But I want to talk about this with you guys because all it takes is something small. We're an interconnected market, a global market that is walking on pins and needles. And one other thing I needed to point out regarding all of this, and I don't have any Euro Swiss exposure. I actually sold mine yesterday when it hit that, basically just before it hit that resistance, I got out of it. And so I'm out of my Euro Swiss. I bought it Monday, sold it yesterday. If you're in the ForexAnalytix trades room, you know exactly when I got out, which was 94.50 something. And I picked it up down here earlier this week. But when you have the Swiss franc strengthening, you know, whether it's Iran and Israel, whether it's weekly jobless claims, whether it's a move in the 30-year, because we have a 30-year bond auction later today. You know, we have a poor auction and the bond market comes unglued, yields spike. I mean, next thing you know, the S&P is trading at new trend lows. So it's very much a domino effect type of market. That's why it may be calm right now, and you might be looking around saying, oh, there's nothing going on. This is not the time to let your guard down. This is the time where you should actually have your head on a swivel. You should be looking at every market and keeping a very close eye on it, on everything that's going on, because all we need is one tipping point to tip it all over. And that's why I'm referencing all of these really important markets that have had very tepid, shallow consolidations. It really is illustrating that this market is extremely fragile right now. So I just wanted to throw that out there because it's important that you don't fall asleep at the wheel. You know, I may have pared back on a lot of positions, but I am at the ready right now. Ryan, is there anything in particular that you're looking at that you think that could, you know, be a little bit at risk right now?
Yeah, as I've been saying, cable looks to be the pound looks to be the one that's got the inherent risk right now. It has staged a bounce off of that support, off of that 50 fib, give or take a 5 pip move underneath.
Yeah.
There you go. So yeah, it's again, this is another one where the bounces aren't looking all that great off the support. So, you know, just look at the price action alone. You've got to say, yeah, it's maybe heading maybe down towards the low 126s. And it needs to do a lot to turn around this move off the 130s. You know, we need to take back at least 128, and you know that's 100 pips away at the moment. So it's got a lot to do to turn it around, but doesn't mean it can't do. So if you're trading it, if you want to be long off of this support area, you don't have to be wrong by much underneath it. And if it bounces and keeps going, then fine. Or either you look to run the short. If it does break and we see a confirmation hold below 126.70, then you can try and run it down as far as it goes.
Okay, so your head right now is in sterling, and I want to show you another you guys something else. And Dale, I'm going to come to you in just a second. You were talking about the Canadian earlier. I played the Canadian yesterday right off of the 618 and the 200 DMA yesterday. So this is the 50 DMA, excuse me. We got right to the 618 and I picked it up and I played it at, I think I got long at 28, 120, 137, 28, something like that. But I'm running some Euro Canadian long, and that's actually a risk off type of trade right now. I talked about this on the week ahead video. I said I was going to buy dips. I actually ended up buying it yesterday, and I'm long Euro Canadian. If you want to know where I'm long, you can just go in the ForexAnalytix trades room, and you can see all my running positions right there. But this is another one of those, you know, if you look at the dollar CAD, and you talked a lot about, you know, CFTC positioning, which has been my big hang up with playing this on the long side too aggressively. But when you're in an environment like this, all you got to do is take the VIX and, you know, take a look at historically, and let's go over to a weekly chart. On the VIX, you can see, you know, spikes higher in VIX tend to, you know, correlate with spikes higher in the dollar CAD. So if volatility stays high, which it is right now, I showed you how we're just consolidating at, you know, above, you know, resistance in volatility. If it persists, that furthers the risk of an upside break above 140. And I don't necessarily like the dollar CAD, but I like the Euro CAD where it's at. So that's how I'm
on the other
playing.
hand, if that false breakout is real and we start breaking down, that would build the case. And if it's an anti-VIX trade, it would build the case for another new high in a couple of months in SPOOs.
Yeah, and you know what else it could, but you know, one of the other things, and I just to go on along that same line, like if you want to press it to the downside, like like today, like
it in the hole.
Like, well, we know right now where the breakdown point is. It's very easy. I mean, it's very simple. You know, you break through 137, that's where all the stops are at. So what could do that? Let's say crude oil continues to rally, which crude oil, if you guys haven't seen crude, it's got an inverted head and shoulder pattern, and I sure as hell would not want to be short crude in this environment. That to me is bazonkers. You're really asking for trouble based on, you know, everything that's happening in the Middle East. But you can see you got your inverted head and shoulder pattern. There's your look right here, right? It actually points to 77 and change. And we're holding the neckline right now. And this could be a bull flag pattern. If you guys can't see it, I'll just illustrate it for you real fast. You know, this could be a bull flag pattern that's just building and ready to, you know, to move. If that does happen, you know, that could be some evidence that helps push the Canadian dollar down as well. But you have to understand why crude oil is moving higher. You know, if it's moving higher because of Middle East tensions or, you know, crap the proverbial crap hits the fan, well, I believe the dollar CAD and crude oil will go up at the same time, and you can throw that correlation right out the window ASAP. So euros under. Oh shoot, did I just miss it? Dang, strong claims apparently.
233. So
233.
there goes
Look at
the
that.
problems again. You know,
Panic
give with
averted.
one, take with the other.
Look, and the Dow is ripping right now. The Dow.
So the markets came off pins and needles for a little while.
They did, and maybe we're gonna crisis averted, guys. Crisis averted. So I'm sorry. I usually pull up the data flash, but I guess I got carried away talking. Dale, you should have restrained me, man. I didn't know our time was up. So anyway,
you got a lot to get out.
Yeah, Aussie yen is pushing up against triangle resistance. Just a little heads up because I'm trading this one, so I'm keeping a real close eye on this. Up as we're up against resistance. Anything else that? Well, I guess what we have to do is pass it over to Dale. So I want to say this, guys. Like I said, be very, very careful out there. It's a very volatile environment, and just because it seems a little calm right now doesn't mean that we have passed the storm. So keep your eyes open and keep your awareness sharp and keep your position sizes smaller right now because volatility is so high that 100 pip moves, are not uncommon. It's a great time to be like in the trader funding program or trading just in general because you are because of the volatility, you can take advantage of capturing some pretty good pips, but at the same time, you want to keep your risk tight. Don't risk a lot. It's okay to be wrong. It's not okay to stay wrong. So just realize that. But Dale, I want to say, thank you for guiding us every day. Ryan, great job on the Flow Show. I've been listening to your Flow Show as I get up in the morning. Because it's on YouTube and the recording is out by the time I get up. So I've been listening to that. You're doing a great job, and I know you're doing it solo without K-Man for the next week. So thank you for that, Ryan.
Thanks, mate.
And so, Dale, I'm going to pass it over to you, sir.
All right. Thank you, Blake and Ryan and Blake talking about, potential storms out there. When you walk through the rain, keep your head up high. And don't be afraid of the dark. And with that, I'm going to bring Mama Vester. Kim, welcome back. How are you?
Good. How are you? Good to
just serenading the community.
I love that.
So, how are you doing with this? The big question is, and I've been looking at things too, Kim. If you have any charts to share, we could do that, or I could share mine. But the big question was, okay, we had this sell-off. We stabilized Monday, whether or not that's a low or not. Are you in the camp that we've started a new trend? Or are you in the camp that this could be a great buying opportunity for another rally in the S&Ps, maybe to new highs?
I'm in the camp that we're going to probably just be sideways up until the election.
Okay.
That's my camp. I just think, we might have some pops up, pops down, but I think until there's certainty. So, and seasonally, this isn't the best time of year. I think, isn't September usually red?
Yeah, I think it's through mid-September, and so let's look at S&Ps here. So, do you think the range low has been established? To me, it looks like we're going to get an ABC up here. I'm conflicted on whether on the question I asked you. That's why I'm asking people that question to see because I have to look at both sides of both cases, the bear and bull case.
Yeah, absolutely.
You have to. In fact, I talked to Peter Brandt, and his philosophy is we have to deal with the possibilities. Okay, that means
Hmm.
everything will happen. Anything will happen. Not probabilities, because that probabilities say that you have a bias, and
Hmm.
never certainties, because that's an oxymoron, certainty in the market. So the possibilities are, you know, that we can regroup and make another new high in the S&Ps, but certain things I don't think will. For example, semis look broken to me.
Hmm.
They could recover, but they look broke. I mean, if the S&Ps rallied to new highs, I don't think semis get much above this. I think that's what it might take. So, are there any sectors that you feel comfortable with, or this was kind of a car wreck, right? The unwind of the carry trade, the end carry trade. Are you trading less because of it? I mean, I told people not to trade Monday.
Well, lots of people couldn't trade Monday because many of the brokerages were shut down, Monday morning. Um,
Yeah.
Not Tasty Trade, though, I might add. That was
Okay.
up and running flawlessly.
Okay.
But
What do you think's
I don't,
behind that, Ken? Is this a dress
well,
rehearsal?
uh,
Huh?
I'm not a conspiracy theorist. However,
Right.
I'm really not. And I do like
I
to do
believe you.
research and see all sides of things. But I personally, I think that if the brokerages hadn't been shut down, we were headed. I mean, I was watching it midnight my time, so that's you live on the West Coast, and it was 3 o'clock Eastern time. And when Japan was, just
Yeah.
kept going down like free falling essentially, we were kind of doing the same thing. I mean, it wasn't stabilizing there for that few hours. Then kind of stabilized overnight, of course. But once the markets opened, then all of a sudden those six brokerages were down. So, in my opinion, you know, I think that probably someone got a call, but I mean, I had someone from CNBC retweet me because I had said this, or quote tweet me. And they were basically saying, well, that would be illegal. And I'm like, I'm not saying that anyone's doing that, but it just was kind of suspicious in my opinion. But it did stabilize the markets, right? Um,
And maybe prevented people from making an emotional decision. But
Absolutely. Yeah,
it's very
for sure.
unethical. It's very unethical.
What's your thoughts on it?
Well, that worries me.
Yeah.
That that kind of thing is happening, and good to know. Whose ever broker was up and running, that's a good sign. I think I've talked to the president of Tasty Trade. I may check them out. And
Yeah.
uh,
Tom Sosanoff is the one that
there's been
runs
a
it.
lot of weird things. The 60 VIX, and I don't know if you know anyone who trades VIX calls, but they didn't respond.
Well, I was short the VIX futures, by the way.
Okay, all right, all right.
But
But
this shows you why you take small position sizes if you're trading options, because it flew up. I was short at about 20. I think my entry, and I did the micros, so this wasn't a mini, but I was
yeah,
short at about 22, and a very small position. So, you know, it was just a good reminder of why and it's futures, right? So it doesn't expire. But it's a very good, but it's cash settled every night. So it's a very good reminder of why you trade small, which is Tasty Trade's
yeah.
philosophy.
And also, when you're selling volatility and it's successful for years, except for minor pops to 20 or so,
Yeah.
hubris is built up. And there
Hmm.
were ETFs that people were buying that were executing short vol trades. So it
Hmm.
wasn't the 10% pullback in NASDAQ that generated this short squeeze. It was everyone on the same side that you were on.
Yeah.
Because historically, with recency bias, it just kept working. And you know, I've said that I actually, that was part of my bullishness, is that ETFs are doing that, and that one day, even though you've picked up quarters off the sidewalk, every expiration, that one day the steamroller comes
Hmm.
and takes it all away. And I wouldn't be surprised if there's some people that went broke. But the fact that they didn't put premium, even the intrinsic value, not even close to the intrinsic value, in VIX calls.
Uh-huh. That's what
Um,
I'd heard.
did you hear that? Because I own these
Yeah.
20s. So they should have
Yeah.
been worth $4,000 a piece.
Yeah.
You know what they went to?
Exactly.
400 a piece.
Yeah. I mean,
That's
futures,
criminal.
obviously. Yeah. 100%.
You
So
know,
what do you think?
I just tell people don't trade VIX options. You know, it's my last
Yeah.
experience with them. To be right and hardly get paid on a historic move like that,
Yeah.
huh? And that's
I,
another good war story.
yeah.
It's a
No,
good
that's,
war
that's a
story.
really good point. And, but have you ever
It's like the
traded VIX
markets are.
future?
I've done the VIX derivatives, like the VXX,
Yeah.
where they can erode with time, but at least they worked, I believe.
Yeah, they did. Well, they did
Okay.
because I was on the opposite side of the trade.
Okay. Yeah. Anyway, that's an, you
I
know, go ahead, Kim.
I use VXM. That's the
Okay.
micros.
Okay.
Yeah.
I also, you know, you've been trading for a while. Can you give me,
Yes.
and you're technical. You do a lot of technical stuff. Can you tell me why, um, that's a 10-year.
Well, I'm not as much a technical trader. I do look at
Okay.
charts, but it's my husband that is the
Okay.
technical trader. Yeah.
All right. Well, you look at charts.
Yeah, of course.
So can you tell me why TLT turned from a market that used to have full-bodied candles to dots?
I do
I
not
mean, when
have
you
the
look at a
answer to
chart like
that.
this, don't you think that maybe you're looking at a bulletin board stock or one of these real thinly low floaters that you have to make an appointment to do a trade?
Yeah, I'm not sure to the answer of that, but what a nice move on TLT. We had talked about
Yeah,
that last time
yeah,
I was here.
yeah. Giving some of it back here. Uh, what do you like?
I like that it's in a steady uptrend. I don't like that
Okay,
spike though.
okay. Any sectors that you like, Kim, in this environment, or what issues do you like?
So, like you said, I mean, obviously, when volatility goes, I mean, traders love volatility, right? But, because you can get those big dead cat bounces. I mean, my husband, when it was down 1,000 points, he's like, "This is a gift, buy
Yeah,
it." But yeah, I've lightened up and I started lightening up probably, I don't know, June, July. I mean, lightening up, adding some cash, not taking my main long-term positions off, right? But some of my more short-term plays, like I had JMIA, some of the stocks that you trade on momentum.
okay,
So I have not been trading those through this, because for me, you can get smacked down. And if I'm going to do that, I like to swing trade, not day trade it. And so, I mean, obviously tech is broken right now. It's been nice to see that overall, even though Buffett sold so much Apple, that it's, you know, kind of held up. Costco's held up very well. Have you seen that?
which one?
Costco.
Uh, no, but yeah, I mean, a lot of these things reached targets that seemed aggressive when I was talking about them, like
Hmm.
200 and Microsoft. So actually overshot it. So we're at major support. So I think this rally is important. See what we do here
Mm-hmm.
in the
But
next
the
couple
price
weeks.
action has been horrible. I mean, when we're up 300 points in the morning, it's sold off
Yeah.
every day. Like
1 day
yesterday,
rallies. Yeah.
yeah, yesterday I saw it going down, and I put a couple micro shorts on MNQ and MES. And then once I heard the bond auction was bad,
Okay.
then I added. And, you know, it was a straight down shot from there. So it'll be interesting because we have a 30-year bond auction, I believe, today. Is that correct?
Yeah. The banks were the leaders and held up. They were the last to cave. They didn't cave until, Monday or Tuesday. And they're
Yeah.
back under their breakout line, like the Dow is. So, you know, there goes some of the leadership, right? So, I mean, what I've seen is that people are mainly talking about staples and utilities.
Yeah, they're rotating into the safety trades.
Yeah, yeah. So they'll unrotate today.
And honestly, there hasn't been a great environment in this last year. You know, I love to sell calls against my stocks.
Yeah,
And, you know, this last year and a half has been a horrible environment to do that in, right? I mean, unless you want to wheel it, which that's just a lot of management, right? Um, Unless you want to wheel it, then, you know, if you were trying to sell premium, which I had on, you know, occasions, you were just getting like, even if you were selling like a 30 delta, or even trying to go to maybe a 25 delta to get good premium and going a month out, 30 days, let's say, 45 days, you were still like, that you were still getting obliterated essentially, right? Um, if you were selling calls against positions that you wanted to hold. So that hasn't been a great environment to do that in. And so now what I do love is this is a good environment. So on Apple's earnings, this is before Buffett announced, I do own the stock. I want to hold it. And so I did hedge wrappers on it. I looked at options flow because I do check that out just as an indicator. And I use bar chart. And I sold calls and bought a 210 put. And I
nice.
think I sold the 220, bought a 210. And so, you know, I was like, okay, if it goes to two, or maybe it was 222, but I didn't pay for the trade. You know, I made it an even trade. And so the nice thing was I'm like, okay, this is a volatile environment. If Apple does go up, I'll be able to roll those calls out most likely, and it'll pull back because that's what's been happening during earnings. So in that respect, it's really nice with this
Yeah, you have some
volatility and range trading.
right, and you have some premium to sell if you're going to be the house.
Absolutely. Yeah. And I do love to do that because it is a great way just to raise cash. For me, it's a great way to raise cash, you know?
Yep.
You know, there's many different ways to raise cash, and people I think sometimes don't think about, and I mean raise cash to reinvest again.
Right.
I think retail traders sometimes don't think about, oh, well, I don't have to necessarily sell my positions. I can sell against my positions, and that's raising cash, right?
Yeah. Yeah, that's really a pearl. So
Yeah, it is.
yeah,
And so that's a benefit of this.
right.
And then also, you know, you could like with the high volatility, you can like buy let's say a future MNQ, you know, Tasty Trade was showing this. I think it's a great call, and sell a call against your future to get premium.
Okay. So
So
yeah,
I think that the premium trade, and I'm saying selling it where you don't have the risk, right? The risk of selling a covered call is I turn over my stock. So I don't have, my account's not going to blow up. I'm just going to lose my stock.
okay.
Same if I have a
That's right.
covered call. Yeah. So safe trade, you know why you're doing it. And this is a great time when the premium has shot up. I see VIX futures is way down again though. Like it's huge down today.
What is that?
The VIX futures is
Oh
down
yeah,
like
yeah, yeah,
huge today.
yeah, yeah. There it is. So, but you know, does this speak to the fragility of the market at all to you, Kim? That, you
Yes.
know, I mean,
Yeah, for sure.
we've seen 10% corrections in the S&Ps with, you know, seeing something like this without the VIX acting like we're in the middle of COVID or bank failures.
Well, I was reading there's maybe you want to look him up, Victor Jones, and he does do some shows with Tasty Trade. And I was reading something that he was putting out about how the VIX was miscalculated that night or something. So I don't know how true that is, but that's somebody that I trust, that knows the markets very well. So, and I've seen a couple people talking about that. I don't know. What are your thoughts on that?
I just
That it
think there were
really
a lot of
didn't spike to
people.
that level.
I just think that it was a short squeeze, and they were having
Yeah.
their, you know, people that have been doing it for years and were, you know, thought it was never going to end, and you
Hmm.
know, everything can happen, and it did.
Well, and
So
what my husband kept saying to me is he kept going, this is overnight. You want this to happen overnight. This is the time to happen. This is the pajama traders, he calls them.
okay,
And so he was pretty confident, like,
that
and
it
he's
was going to
done
be
this for
just
a
a,
while.
yeah, panic low. He wanted,
Exactly.
yeah,
Yep,
so a capitulation low. So, you know, we'll
that's,
see.
mhm.
To me, this level, if we get up here, is going to be important. This 5,400 was the low that held after the first break. And then we had this like day and a half rally, and that's it.
Yeah.
It was a day and a half, and it was pretty sharp, you know, squeeze people. But look at how you could tell what the trend is how fast it gets from point A to point B.
Yeah.
Okay, that's impulsive,
Yeah.
right?
Yep.
So far,
Yeah.
this
That
is
looks,
corrective to me.
it looks like a waterfall down.
Yeah, Wile E. Coyote, here he is. The Roadrunner's back here
Uh-huh.
chasing,
I
and
mean,
the ledge
exactly
gives
like
out.
that.
Boom. So I'll try and sell a rally up here to see what, you know, to try it.
Yeah.
But you know, we start getting much above this, and maybe the case for new highs is for real. But I'll have to probe
I mean,
what kind of a trace. Go ahead.
I do think, within the next 6 months that we will go lower. That's what I think. I mean, we went straight up, and we went straight up on an AI trade essentially, right? I mean, the markets were exuberant. I mean, obviously, I'm talking more at a retail level, right? But that's how I see it. That when you trade every day and you see markets go straight up, it's like this isn't normal going straight up either. I know we
Right.
have V-shaped recoveries and those happen, but there's always like a give back. There's always a time that the market does correct. I'm not saying crash, but there's always those times when the market's going to go down 20%.
Yeah, cycles
I think
go
it's amazing.
both ways. Yeah.
Yeah, I think it's and seeing what happens when the Fed does cut interest rates, and is that going to be bullish? And people were calling for like uh,
Half.
emergency rate
Yeah.
hike. I mean, Powell has never done any emergency anything.
He
That,
creates them, but he doesn't do them.
but yeah, he's pretty like. I'm like, Powell is not going to do an emergency rate hike.
Yeah.
I mean, I guess I don't know if something really was broken, but it was basically looked at that time like it was Japan and we were just way overbought.
Yeah. Yeah. So there's the video. So that's had 5 waves down too. It'd be interesting to see if they could squeeze a new high out of NVIDIA, but there's your poster boy for AI. So a lot of people
Yep.
are saying it was a bubble and it's popped. And
Well,
we
did you
only
see
know that.
SMC?
Oh, go ahead.
Did
Yeah,
you see
that,
SMCI?
yeah, I know that's the other AI trade. So let me.
So the high was 1200 and it fell yesterday about, yeah.
There it is. Yeah.
And so it
look at
fell
that.
yesterday. Mm-hmm.
What a breakdown.
Yep.
700 to 1200.
I mean, it's
Going to
given over
200.
50% back. Yep.
Going
Or
to
it's
200.
given
Yeah.
50% back.
Yeah, would have to
Over
recapture
50% back.
700. Yeah. So this is the company, what's the guy's name, where they mainly invest in Bitcoin, right?
No, that's Mr.
Oh, okay.
MSTER.
Okay.
They're doing a stock split, but so yes, that one, but this was one of those ones trading euphorically,
Like this.
like, you know, with NVIDIA on the NVIDIA trade, right?
Okay. So it's a round trip.
Yep.
We could end up with a round trip. So if we had a
And
round trip, go ahead.
And interestingly, we've had so many stock splits, and after a stock splits, it doesn't go back to new highs for a while. I don't know what statistically the length of time is, but NVIDIA and
that was right near the top when they split, right after.
Yep. So I think NVIDIA could definitely hit into the 80s. That would still make it an $800 stock pre-split.
Yeah. Yeah.
It wouldn't even be shocking if we had a complete meltdown if it went down into, because in I think May, correct me if I'm wrong, or you have it up there. So in May, it was around 60. Yeah. Is that May? So 70. It went down to 765, I think, pre-split.
Yeah, right.
Because at that point I was like, I should buy it. And I didn't even have time to think, should I buy it? Because it like bounced the next day 100 points or something, you could see that low and basically it bounced right back up.
Yeah. Then gapped, filled a lot of gaps.
But I played calls, and then when you get these expensive stocks that are on momentum, everyone's using calls. That's what I did too. Instead of owning the stock at that price, I just used calls to trade off NVIDIA, right? So that's part of it too, I think, is you have people pushing it up through the options market.
Yeah. Are people still mainly trading the one-day options? That's still where it's at.
I mean, there's always a group of those people that trade one-day options, but the only one-day options are, the indexes, right? Or SPY, SPX. But NVIDIA has weekly options. But still, that's high gamma if it squeezes on you, right? And rapid theta decay.
Do you think Amazon looks like a broken stock, Kim?
Yeah, I own it.
Yeah. So I was telling people, get out back under 191, old support, new resistance. And really, this kind of happened in a day. We got to 191 and we were down here. This must have been Friday. And here's Monday.
What a move on that one. I mean, again, that's just like, I don't want to necessarily trade out of. I've already lightened up on it. I still want to hold Amazon.
Okay.
Long term. So, selling calls, doing a hedge wrapper, anything like that is, you're not going to get one for one, but you're going to get some. You're going to be making some of your losses back, and then it goes into cash, and then you can have that to redeploy when Amazon. And I have a short call on it right now.
So you're dancing.
I
call that dancing. You're dancing around with your position.
Like a ballerina. Yeah.
Well, I'll tell you what, it's, go ahead.
Like I said, it hasn't been a great time to do that. So I do welcome this part of it because I can hold on to my long term.
Yeah.
You know, the one thing I've learned in my life is I'm not a professional trader, so I can't trade in and out of every single stock I own. I have stocks that I swing, but I have stocks I want to be in. So then how can I, you know, protect myself somewhat when we start topping out? I don't want to, you know, I can trim, but I don't want to go, I'm not going to bring my whole portfolio to zero.
To cash.
I mean, I'm sorry, to cash. Yeah, to all cash. I have done that before, by the way, and it's not necessarily a good move.
hard to redeploy.
That's the hardest.
Yeah.
100% agree. Yes, that is the biggest issue. And I could think of so many stocks that if I, you know, so I've learned my lesson. I could think of so many stocks that if I had just stayed in that trade, and for me, doing hedge wrappers or selling covered calls, it still gives me peace of mind, even if I'm not getting one for one. I still feel like, okay, at least I've, you know, taken some steps to reduce the delta in my portfolio and feel better about it.
You know, I just want to let everyone know, first of all, they should follow you, Kim, on
Thank
X
you.
at Mama Vester, and that Kim is involved in a lot of these spaces on X where there's pretty good attendance. I don't know if you're running them, but to learn what you are?
No, Wolf Financial. I do it with Wolf.
Oh, okay.
And those are all it's his, he does them, but then I am on as a panelist about 6 to 10 times a week.
So
he runs them all week.
You talk about these things, and do you tweet about these things that you're doing as well? I don't follow your stream that closely.
You don't? No, I'm just kidding you. I used to quite a bit. I haven't as much lately. But you know, we do talk about it all the time on spaces. And it's really nice because most of the people that we're on with are, you know, really knowledgeable. They have different ways of looking at it. Sometimes there's some professional, you know, people that are been in the business a long time, and some not new, but that, you know, might have other jobs. But yeah, he does a really good job at having really good spaces, and they're about all sorts of different things, you know. So we're doing a trading competition right now where we each put in $2,000, and people can follow our portfolios because we're trying to show how you can take small amounts and invest. So Wolf and me, and there's a group of us that are having a $2,000 trading investment. You can't buy options. You have to hold your positions at least a week, and you can't deploy more than 20%. So we're just trying to show people how to invest.
Yeah.
Yeah.
Cool.
So it's been fun.
Yeah. So there's some good mentoring going on. Follow Kim around online, and that's how you find her on X at Mama Vester, MOMMAVESTOR. Follow Kim.
Yes.
And Kim, I appreciate you being here and you know, sharing ideas, you know, and how you dance around things when you still want to hold assets and you want to raise cash without raising cash. What a great great idea. Because what aren't options? I mean, I buy them sometimes. Like I told you, the VIX call. But you know, options are like relationships, 90% expire worthless.
Yep, that is the case. And once you start feeling like you're hitting a bottom, then selling cash secured puts, you know, I don't trade. I personally don't trade on margin. If I'm going to use leverage, I'm going to use the futures, or I'm going to use, I don't remember what else I was going to say. Sorry. So, yeah, I don't ever want, it's going to be hard for me, and I'm not trying to be arrogant. I don't mean it like that. It'll be hard for me to blow my account up per se, because I make sure I don't take on that kind of leverage.
Use
So
less leverage.
that doesn't mean I'm not going to go way down. I'm not saying I don't get hit.
Yeah.
I do. I got hit pretty bad the last 2 weeks, but so
You know how to fight back. You've learned how to fight back. And it's not
yeah,
by
and
being emotional, it's by harvesting income.
mm-hmm,
It's an interesting style. And a lot of people would just try and get it back with outrights. So this is something that you could do where you don't have to be as emotional about it too, because you have
exactly.
the K working for you. Unlike,
And the more risk when you could just last thing I'll say is by that night, right? By Monday, or Sunday night, it is such a good reminder because I did have that short VIX trade on, and when that thing blew up, I was like, oh my gosh, now it wasn't going to break my account, but it was taking more money than I wanted it to, right?
yeah,
Because it's cash settled every day. And I was like, okay, this is always a good reminder why you stay small, because people get complacent. I get complacent, right?
yeah,
So
yeah. So there's that's the opposite of FOMO is complacency. And
agreed.
so it's hubris almost, like how you felt when you were younger, that you were immortal, right? So
Right. Mm-hmm.
anyway, I really appreciate having conversations with you, Kim, every time.
Thank you. Love always talking with you. It's so fun. I really
All right.
appreciate you having me.
All right. We want to thank you for coming here and sharing your expertise. I know you don't think you're a pro, but I disagree. And
Well, thank you.
good hunting, Kim, and we'll talk in the fall in front of the
Okay,
crazy
thank you.
election cycle.
Yes,
Okay.
that'll be a great time to talk. Okay, bye,
All
Dale.
right. Bye, Kim. So follow Kim. Could join the team in about 9 minutes, everyone, on the Morning Edge. Get your edge. Join the community. So what do we have going out here? Taking a little out of the euro. I still think the euro is still some type of ABC. I'd buy the dip. Aussie holding. Yeah. Gold. Maybe it'll fail. I'm telling you, I would love for it to fail. S&Ps. Are we going to fade here from this route decline to here? Or is it going to be a C that takes it up to 3.5 to 4? We'll see. Time will tell. Don't just count your pips, count your blessings, everybody. Okay. Glad you enjoyed it, Laura. No, she's not. Okay, everyone. Good hunting. See you tomorrow. Adios. You too, Sinatra. See you, Laura.